Good morning, everyone. You are watching a live daily market outlook for Wednesday, 6th of June 2012, prepared by Windsor Brokers. The highlights of the day come from Spain, mainly that officially asking for the help for their banks. Moody's downgrades six German bank groups. Outcome from G7 not giving much results, as comments say. Rather disappointing if there is nothing behind this, or could be quite supportive in case that they were preparing something but working quietly on the solving current problem that threatens whole the world as the Eurozone remains in a deep crisis, and the signs of further weakening of US and China as the major world economies now are increasing fears of a possible worse scenario than it is now. The single currency keeps its near-term positive tone of last Friday's fresh low below 123 handle, as well as a cable that holds firmly above 154 level. Dollar against yen is also in the positive near-term action, currently approaching significant barrier at 79.00, while dollar eases further against Swiss franc after yesterday's bounce of 95.75. Did not do much. 96.75 capped the gains, and further easing is seen now. Looking for possibly for a retest on the downside at 90 break below 96 that already occurred during the morning, and a possible further reversal of the longer term uptrend that peaked at 97.69. Crude oil holds its near term positive tone from from Monday's low at 81.19, hovering around the 85 level. That was the highest seen so far, with some positive tone coming from Europe, giving boost to the crude oil along with the single currency. Yellow metal also is bouncing higher during the overnight and the morning, beginning of the morning session, attempting to break above the near-term consolidative range that that had the top at 1630 last Friday's high. As the current gold price is attempting to break higher, that will signal further recovery, and they avert immediate risk of retesting the critical support zone at 15, 20, 30, and likely to allow for a stronger recovery of the yellow metal. As said, Moody's has taken multiple action on German banks' ratings, with most outlooks now stable. The Moody's German bank action means a long-term debt and deposit rating for 6 groups, and one German subsidiary of foreign group have declined for 1 notch. Moody's rationale for German's bank downgrade is driven by increased risk of further shocks emanating from the euro area debt crisis. In the statement, said that Moody's also downgraded the long-term debt and the deposit ratings for several subsidiaries of these groups by up to 3 notches. At the same time, the short-term rating for 3 groups, as well as one German subsidiary of a foreign group, have been downgraded by 1 notch, triggered by long-term rating downgrades. From Spain, news that Spain is officially asking for help. Spanish Treasury Minister Cristobal Montoro said on a radio interview yesterday that the high-risk premium on Spanish bonds is keeping the country away from bond markets, which prevents Spain from refinancing its debt. The spread between Spanish and German 10-year bonds hit euro area record of 548 basis points last Friday. And Spain does not have the door to the market open, and it is a concern given that the Spanish Treasury plans to auction up to 2 billion euros of bonds on Thursday, tomorrow. The Montoro assured that recapitalization of Spanish banks does not require excessive funds, and he urged the EU institutions to help Spain to obtain them. The Treasury Minister also stood by the Spanish government's opinion that the country will not need a bailout and it's necessary to form a banking union in the Eurozone. Later in the afternoon, the Prime Minister of Spain in a parliamentary debate said that the European Union needs to send a clear message about the irreversibility of the euro by reinforcing integration and creating a common banking union and the Eurozone bonds. From G7 yesterday's meeting, announcement that G7 agreed to monitor developments closely ahead of G20 summit in Los Cabos, affirmed the U.S. Treasury Department on a press statement published yesterday after the conference call held between finance ministers and the central bank governors of 7 stronger economies around the world. The G7 ministers and governors reviewed developments in the global economy and financial markets and the policy response under consideration, including the progress towards financial and fiscal union in Europe. They agreed to monitor developments closely ahead of G20 summit. A Japanese finance minister said that the G7 countries have decided during the teleconference to tighten cooperation in order to quell the EU debt crisis. According to Finance Minister Azumi, the recent decline in Japanese stock market prices and the rise of yen are hurting the country's economy, and that group of 7 agreed to cooperate to prevent extreme FX moves. Basically, yesterday's comments from Japanese finance ministers gave a good push for a dollar against yen, as there were some rumors of a possible intervention, and also that G7 members urged the Japanese officials to hold the fire for now, as Bank of Japan officials announced earlier that they are ready to intervene at any time, as they proved during the three interventions during the last year, when the last one occurred in October, when the Japanese currency hit its record high against the dollar, and the results of that intervention were actually quite good, as the Japanese dollar bounced higher against Japanese yen, hitting 84.17. This was the year of the peak of year 2012 on its rally from 76.00. As said, if nothing more was agreed except this, that they will be closely monitoring the developments in the world economies, then it will not be satisfactory for the satisfactory outcome of the G7, yesterday's G7 meeting. However, if they are preparing something that is still not to be announced, and to be a more serious approach to current problem with some more stronger measures, then that will be good and supportive, and it will be a good signal that the world is moving towards a more positive side in the current quite negative environment due to the deep European crisis, as well as other big economies that are involved in this, and basically it will be a signal of possible preventing of the further deepening of the crisis. A quick look at today's calendar that is quite full. Australian GDP already released during the night. Quarterly release for the first quarter of 2012 showed a quite optimistic result, as 1.3% is the GDP for the first quarter, compared to quite low 0.5% consensus, and the 0.4% release of the fourth quarter of 2012, showing that Australian economy is picking up. From Europe, Europe starts actually with the UK at 8:30 GMT with the construction PMI for May. Further decrease is forecasted for today, as 54.2 is the consensus, compared to 55.8 of the previous release for the month of April. From Germany at 10 o'clock GMT, industrial production for April is forecasted to at minus 0.9%, disappointing from plus 2.8% increase and growth in the month of March. European Central Bank is due to release their rate decision today at 11:45 GMT. So far, no expectations of any action as the rates are expected to stay at 1%, with the U.S. kicking at 12:30. Revised non-farm productivity for the first quarter, a further decrease, minus 0.6% is today's forecast compared to minus 0.5% of the fourth quarter, and unit labor cost is forecasted to increase to 2.3% compared to 2% in fourth quarter of 2012. Few speakers coming from FOMC at 14 and 23:00 GMT. Meantime, the U.S. crude inventories due at 14:30 GMT for the first time after 9 weeks of build-up of the U.S. crude stocks. Forecast for today is negative and is forecasting a draw of 900,000 barrels compared to 2.2 million barrels built in the last week's release. From the markets, we're going to take a look now in each instrument separately and see the latest movements in the markets, starting with euro, as the single currency is still in the positive tone of last Friday's 122.87 low. That peaked yesterday at 125.41, followed by subsequent sharp reversal. The pair found a good support at 124.10, close to 50% retracement of the move from 122.87 to 125.41, with the fresh gains through the main bear trend line of 132.82 peak, and approach a break above 125.00 handle, seeing potential of fresh attempt at 125.41, a break of which is required to signal a resumption of the short-term recovery of 122.87, and look for test of the next significant barriers, 126.00 as the next round figure resistance, ahead of a very significant break point at 126.23 and 126.41. The later is the low of 18th of May and the 126.23 peak of 28th of May. And basically break of this level would be quite supportive for the further recovery of the broader downtrend of the single currency against the US dollar. Hourly studies are now above their center lines, keeping a potential for a further extension higher, as the broken bear trend line currently at 124.70 zone, along with the yesterday's intraday high at these levels, offer initial support. There is also the 20 days exponential moving average in this area, and this is initial support ahead of ahead of another ones at 124.40, and the more significant is 124.10. Basically loss of 124 zone, that includes 124.10 and the 123.84, the low of 4th of June, as well as 61.8% retracement, would be quite bearish for the pair, and would likely signal an end of the current corrective action, and the refocused levels at the downside 123 and 122.87. Larger picture studies are have started pointing higher of their extreme levels at the downside, as RSI is now breaking out of the oversold zone. That might be good signal for some stronger recovery, despite studies still being well in the red territory. On the larger picture, regain of minimum 126.40, that is our break point, and the next very significant level at 128.20 would confirm the near base at 122.87 and allow for a stronger correction of the broader down move from 132.82 peak of 1st of May 2012. The sterling is accelerating after 2 days of consolidation within the range of 154.38 and 153.20. This was a dip, yesterday's dip low at where the pair found support ahead of more significant 153.00 long-term trend line of 2009 low. And as long as holding above these levels, 153.20, 153, potentially seen for further extension higher, as this morning's action shows the break above last Friday's post-intervention spike high at 154.38, as well as 38.2% retracement of down move from 157.15 to 152.67, with minor resistance at 154.60 low of 31st of May, seen next on the way towards more significant barriers at 155.00 and 155.28 peak of 155.25 peak of 31st of May, as well as 155.44, 61.8% retracement. That will be confirmation of some stronger action towards the upside and a stronger reversal of the broader downtrend of sterling that moves from 163.00 30th of April, 30th of April yearly peak that bottomed so far at 152.67, just ahead of a yearly low at 152.33 posted on 13th of January. The studies on the daily chart are still well in the negative territory, although some of them pointing higher, but the regain of our significant barriers at 155 and 155.00 and more significant 156 previous strong support low of 12th of March required to confirm that the pair enters the recovery phase and prevent from further extension lower and possible test of yearly low at 152.33. For now, the still negative tone that prevails on the daily chart needs to be minimized by further extension as at 155 and 155.25 after this 156.00. Otherwise, this might be seen just the current move might be seen just as a corrective action with the lower top and the fresh leg lower seen as a likely scenario in case of failure to regain minimum 155.25. Dollar yen is again extending its recent corrective action of last Friday's low at 77.65, break above 76.64 post-intervention spike high, as well as 200 days moving average, and break above the main bear trend line of 84.08 is now regaining a next very significant barrier, previous support and the base at 79.00 now reverted to resistance. Firm break here and possible today's close above these levels would give more credibility to the current corrective action and allow for some stronger move higher, with 80.00 seen as our next upside target, along with 80.13, the peak of 22nd of May. That also marks break point. 80 zone actually is sort of a break point for further corrective action. Failure to regain minimum 79.80 will again risk further extension of the broader downtrend. The studies are still quite negative on the daily chart, and we need to see the firm break above 80.00, firm break and close above 79.00 to open way for a stronger extension, and 80.00 is seen as the next quite significant barrier, regain of which is to confirm the near-term corrective phase underway. The dollar Swiss remains in its near-term corrective action of 97.69 peak of 1st of June last Friday, with the low of the move at 95.75, just about 50% retracement of the up leg from 93.66 to 97.69, giving good support for now. However, yesterday's strong rally of 95.75 and regain of 96.00 failed to regain our next barrier at 97.00, and subsequent easing is now seeing as a threat for a retest of 95.75 and possible further retracement of the latest up leg, as the studies on the 4-hour chart are now breaking below their center lines and still all pointing lower. There is a great possibility that further easing would be quite likely, as 20 days exponential moving average currently at 96.43 is capping the upside for now. On the hourly chart, also negative tone that dominates in the hourly studies. It keeps the downside still vulnerable, as yesterday's upside failure at 96.75, just ahead of 97. That also marks a 61.8% retracement of the recent down leg from 97.69 to 95.75. Keeps focus towards the downside. The loss of 95.75 to open way for a further retracement, 50% at 95.67, just below this level, and more significant 95.27 low of 28th of May, as well as 95.20, 61.8% Fibonacci retracement that will crack the current uptrend and allow for deeper reversal with the 95.00 round figure support and the peak of 18th of May seen next. Key short-term support remains at 93.66, 21st of May higher low, and loss of this level would be signal for a more significant correction of the broader down uptrend from 90.41 1st of May, a low that peaked at 97.69 on 1st of June. So for 1 month, the dollar appreciated over 7 figures against the Swiss franc, as studies are also at quite extended points, and some corrective action is not ruled out at this point. So far, the ascending bull trend line drawn of 90.41 is holding the downside, while break of this level would be a signal for a more significant corrective action. And finally, quick look at gold, that is still holding the positive tone of recent lows. At the latest one was at 1532 and 1545, where the strong rally occurred there last Friday, with 1530 seen so far, as the yellow metal regained some important levels, among them 1600 and 1616. A further extension higher is seen quite likely at this point, and that will also prevent the gold revisiting a critical support zone at 1530, 1520. Firm break now above the previous high at 1630 is required to open way for a more significant corrective action, and refocus levels at 1671 peak of 1st of May, and 1679 12th of April 2012, lower tops of its recent downtrend from 1790 peak of 29th of February. For now, we need to see the sustained break and the possible close above 1630. That will be a good signal for a further extension higher, as the studies on the daily chart are pointing now higher and attempting to emerge out of the negative zone, and that will be a signal for some stronger recovery. Daily Chimoku cloud base currently at 1650s among the barriers to be regained, and basically above 130. This is the first more significant resistance ahead of 1671, previously mentioned 1st of May peak for the yellow metal. On the downside, the immediate support lies at 1612, which marks current recent range floor, while loss of this level and the more significant 1600 would weaken the current structure and would signal further delay in the recovery. Very important support, as said, at 1600, loss of which would put current bulls on hold. Otherwise, holding above 1600 would be seen as good support for the yellow metal for the further extension higher. That was all for today, 6th of June 2012. Thank you all for attending our live sessions. We are back tomorrow morning at the same time at 7:00 GMT, and we are expecting you to join us again. For any feedbacks and comments, please feel free to send the email at the beginning of the session. You can find my email address. I will be glad to assist in any problems, any questions that you have. After this, there will be question and answer session, so please stay with us if you have any questions to ask. This was all for today. I wish you a nice day and very successful trading. Good luck.